Good morning, everyone. Good morning. Welcome once again to the morning market review where we make daily profits. My name is Victor, and I'm going to be your host this morning for the market review. So this is just 1 minute past 8, almost 2. So I'd like us to wait for more persons to join in the call before we start this session this morning, so we don't have to go back and forth. You know how it is. A lot of persons come in and start asking for different instruments to be analyzed. Meanwhile, it's already analyzed. So let's just exercise a little bit more patience. Let's wait for more persons to join the call before we start. Right. Thank you for your patience in advance. Okay. Good morning once again. For those who just joined the call, I addressed the person here earlier for us to exercise a bit of patience before we can start this call. So I think now we can start. Those who are or who will be joining us later, try and catch up. Meanwhile, don't forget that this is also streaming live on YouTube, so you can also head over to YouTube to watch the same video. Head over to YouTube, just type Rally Trade. Once you're at YouTube, search for Rally Trade. Then under the videos, look for live. Then you see this particular video right here. And so you can watch it, replay in case you didn't get one or two things I would say. So you can also just go back to the video, watch it again, and understand what I said. If for those who have been joining my analysis, you notice that I just try to simplify the whole thing. Right? I try to simplify the whole thing. You know, training is not complicated as such. We are the ones that make it look complicated. There are a lot of factors into it. Good morning, Hassan. Good morning, sir. Great trader. You're all trying to be great. All right. So there are a lot of things to this market. There's the learning aspect to understanding the market, understanding what kind of market you are trading, the foreign exchange markets, the currencies that are involved, the ones to trade, the ones not to trade, understanding there's also commodities markets where we have gold, where we have oil, where we have agro commodities, understanding we have the stock market, but here on Rally platform, we do more with the indices. So understanding there's indices, the likes of the NASDAQ, Dow Jones, S&P 500, the like. So we usually call them US 100, US 30, D40, D30, US 2000, and the likes of them. Now understanding those kind of markets, understanding the different kind of volatility. Now, on currencies, you don't have that much volatility. Markets doesn't move too fast. It moves gradually, all right? But when on commodities, market moves faster, you make more money. But on indices, it moves even way more faster and you make even way more money. And at the same time, you can lose way more money. Now, a lot of us have been exposed to both the winning and the losing aspect of trading, where you make profit, you lose profit, or you lose money. And some of you are at the point where you are doubting your ability to trade. Yes. You're doubting your ability to trade. So, and I can assure you that a lot of you are good traders. Technically, understanding the markets, you are good. You might not be the best, but you are good to go. But one other thing that will really, really make you profitable, it goes beyond understanding the charts. It goes beyond understanding the charts. It also cuts across your psychology, your emotions. These are very, very key aspect of trading. Then your risk management. A lot of persons here are gamblers. So gamblers, when you win, you might win hard, and when you lose hard. And this market is designed so much so that even while you are in profit, your profit will increase, decrease, increase, decrease. So it tampers with your emotion, and somehow you feel that the profit you are making will disappear. Hence, the moment you're in a little profit, 5,000, 10,000, 20,000, I'm in profit of 50, you just cut it off. But when you are in negative trade, you are hoping that the market will come back. Hence, you leave the trade to run. So your negative is at 10,000. Okay, to come back, it goes to like 8, 7, drops back to 15, goes to like, 10, drops all the way to 20. And you are hoping it will come back, and it keeps increasing. And at the end of the day, you find out that the negative is so much, you feel if you close it now, you lose so much. Perhaps you just wait a bit, let the thing reverse, and it doesn't come back. Hence, you find yourself in difficult situations. Some of you right now, you have a whole lot of negative trades still running. Hence, you are scared to take more trades. And some of you, just hit those negative runs. Now, I'm trying to appeal to your psychological side, because from my experience, just doing this market review is not really enough. It's a start, it's a good one, but you see, you need to go beyond the review to working on your risk management and your psychology, all right? Risk management and psychology. So what risk management does for you is risk management keeps you long enough in the market for your edge to play out. It keeps you long enough in the market for your edge to play out. I'm sorry, we'll still dive into the charts. So I'm just trying to get more persons into the market before we continue. Good morning, sir. We'll look for work. Good morning. Yes, so I said your risk management helps you to stay long in the market for your edge to play out. I mean, when you have a risk management, it means that, you want to take a trade, and in case this trade doesn't go your way, how much are you willing to lose? How much are you risking? You are risking 20,000, you're risking 10,000, you're risking 50, depending on your lot size and what you're looking at. Okay, if it doesn't go my way, all right, just close me out at 20. I don't want to see negative of like 100 or 200. It's fine. I'll do it again. I look for the next trade, I go in. Now, what happens is the market at some point will just, you see the analysis you are doing, that's moving average that you're using to trade, that's Fibonacci that you're using to trade, that's your RSI that you always look out for. Sometimes it works, sometimes it doesn't. Now, that time, you might just have that good week where your RSI works like a magic. Works like magic. For that week, you keep making massive profit. So that is what I call your edge playing out. You have an edge, you have a strategy. Your strategy will not work 100%. Your strategy will not work all the time. Your strategy works some of the time. So those times that your strategy doesn't work, your risk management will help you not to blow your account, right? Until your edge plays out, which is until that your strategy works. It might work straight for like a week, 2 weeks, or even for 1 month straight. It might just be working, you know. So once it's working, you make a lot of profit. Good. Once the market condition changes and your strategy seems not to work around that period, risk management keeps you long in the game. You lose some, you don't lose all till your edge plays out again. All right. So, and your psychology at the end of the day. Now we have a whole lot of trainings that we're going to be doing about your risk management, trading psychology, added to your edge, which is your strategy. Okay. So please, I just want to teach you one strategy. Let's apply your risk management and work on your psychology, which is accept the fact that you are not going to win every single trade in the market. Stop struggling to be perfect. The market is not designed for you to be perfect. We are dealing with smart people here. You're trying to make money from smart people, right? So you won't win all the time. So the better the earlier you accept the fact that it's a combination of wins and losses, the better it will be for you. So you anticipate that, okay, there are times I might experience some losses, but how do I manage those losses? Okay. So that when the win starts coming, I will be in the market to make money from the wins. For today, Wednesday, the 12th of March, we are going to be looking out for some fundamentals. But the top of the fundamental today is our dearly beloved CPI, the Consumer Price Index, which every trader anticipates around the second week of the month. From the US. Now, this is an inflation data. It tells us how much of inflation that we have in the US. Now, it's also it tells us, it's one of the ways which they try to measure how viable the economy is at every given time, coupled with the NFP, then the CPI, and then come the interest rate. So if the CPI is high, which is this one right now that we're looking out for, the consumer price index, if it comes out higher, which is there's more inflation, what they'll do is to increase the interest rates. By increasing interest rates, you are trying to improve the strength of your currencies, okay, vis-a-vis the inflation. So by 1:30 p.m., we're going to be experiencing some massive volatility in the market, all things being equal. NFP was a disappointment in the sense that it didn't really move market as we expected. So hopefully the move will shift to CPI. Then at 2:45 p.m., we also have the Bank of Canada rate statement, as well as the overnight rates. Then by 3:30 p.m., we're looking at the press conference from the Bank of Canada about the rate statement, all right? It's just like interest rate for the USD. It's just more like interest rate also for the USD. So these are the major fundamentals we have. So from 1:30 p.m. all the way to 3:30 p.m., the market should be volatile for the US dollar and for the Canadian dollar. So basically, every other thing should be technicals for today. Every other thing. So back to our chart right now. So let's start from our falling USD JPY that is looking promising at the moment. Looking promising. So for those who have been trading the USD JPY, you notice that the market rather has been brutal in the sense that we have always been used to buying, personally, I've been used to buying USD JPY, but it has been falling massively, falling massively, falling massively, and just breaking below even major key levels. This key level of support, this was where it fell to the last time, hoping that it would stop. It looked like it was stopping, but broke it again, and headed to the downside. Also, so let's look at what most likely happened today. So we just look at what the chart is telling us and how can we follow what the chart is telling us. So let's see what we can get for today, all right? Now, when the market is heading down, our instinct is basically to look out for sell opportunities. Whenever the market is heading to the downside, our natural instinct is to look out for sell opportunities in the markets. Okay, let me start from here. Okay. All right, so I have my trend line in place, which makes the market look this way. So if this market is going to keep selling, we want it to come back to hit our trend line. All right, we want it to come back to hit our trend line or to look out for another key level. So there are different key levels to watch out for. There are key levels to watch out for. So when market is selling like this, we are basically watching out for areas we call the supply areas. Okay, sellers deal more with supply. So how do you recognize those places? Those initial points where the massive sell started from. And before a massive sell, you want to see a little push up. Before a massive sell like this, you want to see a little push to the upside. Excuse me. All right, so before this massive sell, you want to see a push to the upside. This push to the upside will tell you the very zone where you are supposed to be selling. So you see this push to the upside, the buys, excuse me. All right, so you see this buy to the upside, the whole of these buys, you extend it this way. This is where you want to be selling from. So the moment price hits this level, you start to sell again. And once you are selling, you are targeting the low it created earlier because price is going down. So it's expected at some point it gets back to this level, right? So which it took a while, but it got there. Good morning, Adeyemi. Good morning, Mr. Adeyemi. So let's keep pushing. Now you make successfully sell from this level, okay? Successfully selling from this level. And you can see that you have a sell, struggled, hit target, came up again. We have that same sell again, hit target. Now, until price breaks below this level, below this low it created from this initial area we are selling from, then we look for another zone to sell again. Now, after creating this particular massive push that broke this level here, so look out for where you have massive sell. But before that massive sell, there is a slight push to the upside. Now, there's one here. There's another one here. There's also another one here. There are like three different levels for which all of those levels, what we have there is they are liquid. You have liquidity. So if I mark this level here and I extend it to the future, you notice that price came into that level, looked like it was breaking rather, but still respected that particular level. And there are times where when it's at this level, perhaps there was a news that came out and pushed it slightly higher, but because the overall general trend at the moment is a downward trend, so it will quickly recover and push back to the downside, right? So if you notice again, I'm just trying to show you a strategy. You can go back to YouTube and watch this video. So this was a low it created, right? Before it started to retrace. So if you are taking a sell from here, your target should be this low, which finally got hit, and now it broke again. So for the fact that it broke again, look out for where you have massive sell. Before the massive sell, there's a slight push up. You can see this whole massive sell. Before it started happening, there was this slight push up, right? Good. So what do? You identify that push up from this down here to the up. You extend it to the future, just the way it is. And your job is to wait for price to rally back to that level for you to sell again. So you can see how smoothly you have a clean sell and a massive push to the downside again. Now remember, once you are selling again, your target is this level, which is expected that price should take it out again. Okay. Now price successfully took out this level. So this is current market price. Now, so you will notice from what we have analyzed, what are you expecting in this market for USD JPY? We still want to sell. All things being equal, we still want to sell, right? So now you notice, okay, this one is invalid because this was the origin we sold for. The moment it takes out this one, we start looking for another point again. So you could see this massive sell to the downside, right? Good. Now, where was there a push up? Yes, this push up before the sell. So we do the same thing. Identify this push up here before the sell. You extend it to the future. And all you do is to wait for price to hit this level. Then you sell again. As you are selling, you are targeting this low it created. So price is expected to come back down to hit this low. All things being equal. Like I said, it's never 100%. It might not work exactly as you're expecting, Hence, your risk management will keep you in the game. So you can have your stop loss slightly above where you are taking your sell from. Always have your stop loss. So in case it takes you out in a loss, then you look for the next point to sell from again, which is here. Now, if it takes you out again, then obviously market has done what we call a change of character, which means it's no longer a downward trend. It has changed to becoming an upward trend. So what you start looking for are buy trades, USDJPY. But for now, we are still looking for sell trades. Okay, we are still looking for sell trade. Price has not taken out this, not taken out the second. So we want to sell now, but you see, price might actually start selling off from here. You know why? Because this move here is to the upside, but you see, this buy started from here. So if I bring this down here, you notice that price is already in that sell zone. So yes, we can hit our sells, but still have your stop loss. It might push slightly inside, but overall, it will still sell. All things being equal. Okay. So that's for USD JPY. Now, this is how you do simple analysis, nothing complicated. You just, you don't complicate the matter. Just have an edge, have a strategy. A strategy you feel, okay, even if it's a 50-50 or is that good is like a 60-40 or 70-30. Wow, awesome strategy. That means you win 70% of the time. Now, this strategy I'm showing you wins 70% of the time, sometimes even as much as 75%. Okay, never 100%. But you see, out of 10 trades, I should have 7 that will follow this, my exact analysis, right? So the remaining 3 that wouldn't follow, my stop loss will help me remain in the game instead of blowing my account. So this is exactly what I'm trying to make you understand. Trading is not that complicated. You are the one complicating matters for yourself. Okay, so with this I have here now, I don't think too much. I only wait for price to come into this zone. I take my sell, I have my stop loss, then I just go about my other business, focus on my job, focus on something else, take my mind off the chart, and allow the market to play out. Okay, you might have your take profit, you might not have your take profit, but it's all good. Yes. Okay. Kingsley Fechukwu. Good morning, everyone. Yeah, if you were on this call from the beginning, I tried to establish that my goal is not just for you to take trades. It's one thing for me to analyze the trade. Like I said, it's not enough. You always be depending on this market review. I need you to understand the market for yourself, which I'm trying to do. Hence, I would pick the instruments that I want to analyze. I wouldn't follow the ones you are dropping right now. So you can apply the same template on any instrument, this same template on any instrument. Just understand it, all right? Understand this template. That's why I remind you, you can go back to YouTube and watch this video again. Understand how I analyzed USDJPY that I just did. So now this is NZD-USD. So the first thing is to identify your trade direction, which is your current trend. So NZD-USD, my H4 time frame, was a downtrend, because of late, is not looking downward again. Now, this was the last low it created. Okay, this was the last low it created. So let's see what price has been respecting more. Now, from my H1 time frame, what's the possibility of having a class on stop loss? These are basic things that we do in our trainings. Even if you attend the online training, stop loss is done there. But just reach out to me at the end of this call. Look out for how we can do that. All right, so NZD USD, we see some massive push up. Now, either direction, in either direction, it can be buy, it can be sell. So let's go back to where price started pushing from. So you see what price is respecting more. Now, this was the last low it created. Let's see if it hit that place again. Oh, obviously, that's the first time it created the low. This was the first time it created the low. Now, why did it just keep pushing high from here? What happened? Since it was selling and we're looking out for sell opportunity, did it get to another point where, so from here now, this whole sell started from up here. there was another level here, but the overall started from here. So we have two levels, here and here, right? Good. Now remember, before the massive sell, we look for the buy up. This was a massive buy up before. This was a massive buy up before this sell to the downside. So you can see if we extend this to the future, right? You see that price came back, hit the zone and came to the downside, came back again, hit the zone, came to the downside. Now, what are we waiting for? Remember, the moment you are selling from here, you are targeting the last low it created before the push up. So our target is supposed to be here. The first time we sold, didn't get here, came back again. You can see this time around, it pushed slightly higher. But overall, it came back again to our target, which tells us that we are still very much selling, right? We are still very much selling. Now, if we keep using this same area right here, if we keep using this same area right here, if we extend this into the future, okay, so we can still keep selling, or we look for fresh ones. Fresh ones, by fresh one, I mean this massive downward movement, this little buy up before it, you can still use that, right? So, sorry, we keep extending, right? We keep extending for sell. Now, obviously, it didn't sell. Instead, it pushed to the upside, but it came back again to our level. You can see this our low, right? Price came back all the way again, which means there is something keeping price from going to the downside. All right, let's go back here. Okay, this was where we identified this particular sell. Okay, so this was where we identified that particular sell. Now, price has been pushing higher than that our level. Hence, we look for a supply level price created. Now that price look like it's pushing to the upside, so we might want to start buying this particular market. Hence, for us to have a buy, you look for a sell before the buy. This is the direct opposite of the sell now. You want to buy, you look for a sell first before the buy. Now, let me show you smoothly how this works. Let me just show you smoothly how it works. Now, look at this buy here. Look at this, the whole of this buy. There was this sell before the buy, right? So if I mark this sell and extend to the future, notice that price after buying, it came back into this level. We keep buying again. So now we have this massive buy to the upside, right? So before the massive buy, there's this sell here. There's this sell, the whole of this sell, right? So if we extend it to the future, price didn't hit at this point. It has not hit this level. So we are just waiting for price to hit this level for us to have some buy trades. Okay. So this is NZD. Price needs to hit this level for us to keep pushing to the upside. All right. For us to keep pushing to the upside. Now, if at all it gets to this level and it doesn't stop, it keeps going down, then we are going to be looking out for buy trades all the way down here. This was the last low it created. So all the way down here. So if you look at it critically, you see that price is trapped inside of this support level. Every time it comes there, it pulls up. So it comes here, pulls up, pulls up, pulls up, pulls up. So all things really important. It should pull up again. So NZUSD, we are looking out to buy on the condition that price gets to that particular level. Okay. All right. So this one that I'm sure some of these requests are basically because you might be trapped in a bad trade. GBP/JPY is not really moving too far. Price is just trapped inside a kind of range, Okay, it's clearer on the 4 hours. So price is trapped between, okay, this high point here. There are two levels to it. Then this support level right here, and this lower support right here. So the same thing with USJPY. GBP/JPY has been doing some sell, but of late, it's not looking at selling much. Instead, it goes up, it comes down, it goes up, it comes down. So this is what it has been doing of late after giving us this sell, after giving us this massive sell to the downside. So this is what GBP/JPY has been doing. Now, these are 4 hour time frame. So let's just go all the way to 1 hour. So on our 1 hour, you notice that price is just really bouncing up, bouncing down. So remember our principle, our basic guideline. So while price is busy selling, you are trying to identify the supply areas from which the sell starts from, which all things being equal, it can possibly sell again. So this massive sell to the downside, you notice there was this buy up before it. So the whole of the buy up. Okay. Now, even before now, you might wonder why price didn't go as far as this the first time. Now, in doing this sell, it had a bit of a break. This break gave us slight buy up before a continuation to the downside, right? And that place can also be significant, but it's a minor area. So we have the major places, then we have the minor places. Okay, so this is a minor area. Notice that this buy up is smaller and it looks a little bit choppy, but this one looks more established. So if you even identify this little buy up, you notice that you have at least a trade. Okay, and don't forget, all the way down here was where it stopped before the retracement started. So whenever you are selling, you're targeting this level, right? So this time around, it came all the way to the origin where the sell started from. You pick your sell again, you are targeting this level, which got hit again, all right? So now this level was taken out. Where did this new sell start from? This place. It started from here. This is the origin. There's this level, there's this level, there's this level, but this is the origin. So, which means by implication, price can still, most likely, the probability of price selling from this place is even way higher. So you have it here again, which price hits again. You have another sell, okay? So you have this, and we keep printing. Sorry. If I don't do it this way, some of you might not really understand it. And remember, I said you might not get it at a go, but trust me, if you can understand this strategy, if you just can understand it, that's all. That's all. It's a game changer, all right? It's a game changer. So let me make it look small. So you see the level I'm talking about. From this origin, we got first hits for a sell, we got another hit for a sell, and now, so what do you think with what we have analyzed now, what do you think would happen on GBP/JPY? What do you think? Up until this point, what do you think will happen to JPY? Please, I need your response so that I won't just be by myself here. What do you think? You can type. This is GBP/JPY at V. This is GBP/JPY. Okay. King said it will keep buying for a bit. Okay. Overall, are you expecting to just keep buying, or okay? AY said reach that point and sell. Possible sell. Excellent. So you see that what we are waiting for is to sell. But for us to sell, price needs to push to this level first. All right? It needs to push to that level first. So now you are beginning to understand. So you know that thing that happens when you just open your charts, maybe on your laptop or even mostly on your phone, and you just this is going down. Should I just it's going up rather? Let me just buy. You just click buy. Pa! All of a sudden, price starts running against you, going down, and you start wondering. It's because you didn't do your due diligence to analyze the trade, analyze your chart before placing your trade. So most times it's after the trade starts going negative, you start looking, or you start doing the analysis to look at the possibility of price going your direction later. So if you do this now, you just know that, oh, you're just waiting for price to get here for you to have your sell trade, or you can put your, what do we call it now? Your pending order sell limits let price hit your sell limit. If you can't wait and be looking at your chart, just make sure you have your stop loss in place to avoid stories that touch. All right. Okay, it says reach that point and sell, possible sell at the point of the push, we sell again until it drops likely to the origin, again until it drops likely to the original support. Yes, it is a resistance now. Yeah, to push up and sell is a must that it will reach that point before selling. Not AY, it's not, I like your question. It's not a must, not 100%, not 100%. There is a 20-30% chance that I might not get all the way up here. Yeah, there is a possibility I might not get there. But if you place your sell now, you risk having some drawdown negative first before, if at all, the sell starts selling. Okay, so if you want to avoid the drawdown, it means that you will just not sell now. But if now, knowing that if this guy starts to sell, let me call it guy, if GPY starts to sell, most likely it should be able to sell all the way to this level. Okay, these two levels, 1 and 2. So even if it's already dropping, you can still join the sell. If it doesn't get here and it starts dropping, you can join the sell, then put your stop loss somewhere above this level there. So it depends on what you are seeing. You need to be flexible with price. Price will not, even if price will sell from resistance, it might not sell the exact same way it did the first time. Something like this. This one got inside. This didn't get there, right? This one didn't get there before it started selling. So if you notice this sell, you can join them, put your stop loss above the point where the sell has started. Okay, so that is just what you need to know about GBP, JPY. Okay, so let's start going to the big boys now. Gold. Thanks. We are still selling till break structure to go downside. Felix, exactly. My Oga, you are most welcome. It's been a while. Seems like there are some other analysis someone will do. He will not consider the moving average or trend line. Okay. I feel he may start selling anytime now because that's king. I feel he may start selling anytime now because if you consider the last point where it had a buy from that massive sell, it may choose to start selling at any point from where it is. Yeah, you're all right. There's a saying that one way does not lead to the market. A sell is a sell. We are just trying to look for the perfect area to sell, which there's no perfect area, right? We are hoping that it goes as high as that point because if it does, you will have little or no drawdown almost immediately you enter your trade. So that's what we are. We are all looking for a trade that the moment you enter, the only thing you see is spread. After spread starts going your direction. So that is where that up part is where you're going to have that. Yeah, I want to come watch it. Get it. So this question, since there are some analysis at Eddie, someone would do, he would not consider the moving average or trend line. Okay, so it is not every time you have your trend line, especially when the market is ranging like this. Your trend line cannot work here. Your trend line has already broken. Okay, let me put this. Has already broken structure. Excuse me. Your trend line has already broken structure, which is if I would have had a trend line, possibly had my trend line maybe from this level. Let me push it this way. Okay, I would have possibly had my trend line from this level right here. From this level right here, which price has now broken my trend line already. Price has taken it out. Okay, so at this point now, price is doing more of horizontal. This is the last point it got to. Price is doing more of horizontal movement right now. So our trend lines can. Meanwhile, if you also apply your moving average too will not work. Now, if you listen to my analysis from the beginning, I try to establish the fact that no matter the strategy you are using, no matter how good it is, there are times where the market condition changes. Hence, for that period where market condition is going through that phase of change, your strategy will not work. It doesn't mean it's a bad strategy, it will not work. So even if I apply moving average, right? Let me apply moving averages. You would see that moving average 2 will not work. So let me say moving average, let me apply, okay, I like 50 and 21. This is 50. So let me add my 21 moving average. So if I add 21 and I make this red, okay, then I apply it. Now, what do you notice? You notice that price is just becoming too choppy for your moving average to give you a good trade at this point. So you see that price breaks below your moving average, breaks above, break below, right? Break above, break below. Okay, it even tried at some point here. Breaks above, breaks below, breaks above. It becomes too choppy. You can't use your moving average to trade again because this market is no longer trending, it's ranging. Trend lines, moving averages are best used when market is very much trending. But when market stops to trend, it starts to range, that period, they will not work. So that's why we cannot apply at Eddy. That's why we cannot apply your moving average or your trend line to your chart right now. Okay. So let me see, even your GBP JPY, notice that it's trending. Okay, you can see that it's an inducement. Price is trying to push to that area. Okay, so that's why you cannot apply it. Even if I apply my moving average to GBP JPY right now, it will fail. You apply your trend line, it will fail. How do you want to trend it? It will fail, right? So let's go back to gold and let's start wrapping it up. Okay, so on gold right now, let me clear the whole of this thing. Gold is trying to play with a lot of people's emotion right here. So now we'll be used to buying gold last year. I mean, massively trending to the upside, massively trending to the upside, which was good for everybody, especially those who are buying. So you don't need to think twice. Just come and look for where to buy. At some point, it gave us some sales. Okay, we resumed the buying again. We're hopeful. Now, price is not really buying, not really selling. So it's going through a transitional phase. Hence, you want to be careful trying to trade your irrespective. My own analysis is I like to how do I put it now? I like to stay with the winning side. The winning side. The side that won the last match, I want to bet that they win again. Okay, until they tell me otherwise. Oh, at Kennedy at Daytona. Yeah, I'm so sorry about that. See, these are some of the things that we face if we are trying to be perfect with our trades one, and you're not having some risk management at all. It's can be very dangerous. So now, what I notice on gold here is, first of all, first is I want to identify my most recent low. Okay, there was this one here first, and price broke it and came all the way to this one here. All right, good. So these are the two lowest points for gold currently. Okay, that's one. So it's in between that range. Number two, the highest point also is at this level. So when market is ranging, always you can play around the highest point and the lowest point. What you don't want to do is to extend your lock further. All right, do not extend the lock further. Hence, okay, so hence price is just in between this particular level here. So let me be fast about it. Now, the last dominant area I had for some massive sell is a bit choppy. The last dominant area I had for some massive sell. Now, I see the origin of the sell started here, but there was a quick break here. There was a quick break, so it's not massive yet. The massive one then started here. This is much more massive than this one, right? So if I will take this as the origin now, this one as the origin, remember how we drew it from the beginning of the buy to the top of the buy, then extend to the future. You will notice that that is why price is not getting to this up part. It's choppy. The major move started from here, then retraced here again, which means that hence you'll notice that if you are selling from this level, you would want to target here at first. Let me take this out so that I won't confuse anyone. So you want to target here. Now notice what happened. Then price now came all the way down to this level right here, which is good. So it means that we now have, apart from this up part here, we now have another sell again from this whole buy to the upside and extended. But you see, the two of them, they are too close to each other. So we can just extend this whole level all the way down. So if you extend it all the way down, you notice that this whole zone is the zone where you want to be looking out for your sell trades. Where you want to be looking out for your sell trades on gold, right? So worst case scenario is that it will go as high as the upper part of our range. Oh, sorry. Okay, it will go as far as the upper part of our range. So we will always be looking out to take our sell trade from here. Hence, price has been trying to sell. Now, the first point, which was this level here, where it first of all dropped to, that's why price was dropping to this level, and it has not yet dropped to this level, which tells us that there's a possibility that price at any time can just break and keep going to the high side. But all things being equal, I'll still be banking on the opportunity to sell this guy. Now, remember, the only thing that can interfere with our analysis is going to be the CPI this afternoon. So CPI will either take it back to the upper part of the range to sell or bring it back, take it down to this lower part of this range for us to start buying again. So CPI is what can alter this gold for us. So, but most likely we are still looking out for sell trades gold. That's my own directional bias. Let me hide this. Okay. Said oil. Okay, let's quickly rush through oil. So oil has been also disappointing, massively trending to the downside, massively trending to the downside, like massively trending to the downside. But there was this support here, and it looks like oil, the lowest of the low. So you can see that perhaps we might start having a change in direction from this level now. Okay, so what oil has done, it has gotten to that point. So we want to be careful the way we continue selling oil at this moment. That's one. So on our 1 hour time frame, let's look out for, if at all price is going to sell, where is it most likely going to sell from? So notice our major supply areas. Sorry, let me identify the major supply areas again for oil. So I'm not just telling you, oh, buy, sell, whatever. We are doing this analysis together to establish the possibility of either a buy or sell. So this origin where this massive sell started from, this is the main origin. This is a minor one compared to this one. All right, so the whole of this buy before this sell and extend it to the future. So you keep extending until price hits this level. The moment price hits this level, you're going to be having some aggressive selling again, right? Now, even if price will change direction, at least it's supposed to respect this level, a bit of a sell first before it keeps pushing to the high side. Now, what it has just been doing is to respect this other level. So this slight buy up before this massive sell again. So if you extend it, you notice that price is just respecting this particular level. Okay, it's just respecting this level at the moment, right? And for the first time it did it, it came back all the way down to the low. Now it's trying to either work its way down or work its way up. So if it gets here, probably a sell all the way down here. Or if it breaks and goes here, then another sell. This is what I'm looking out for. Oil. A sell was here and here is where we are waiting for that sell. US 100. US 100 also up, down, up, down, up, down, but more down recently. Okay, more down recently. And in my own opinion, there's a possibility that price is coming here and here. There is that possibility that price is coming to that level. Okay, there is that possibility. Okay, so all things being equal, if we are looking out for sell trade, we've gotten our directional bias. So where do we look out for our sell trade on US 100? Okay, there was one origin here, which, okay, this level, a little bit of hit. Okay, this massive sell-off, then this buy before the sell. Only starting from this level. For us to be pivots specific, this buy before this wholesale. Now notice that there was this small break in between. Price is just respecting this small buy before this continuation. So this is where we are waiting for price to get to for us to continue and sell. It's a simple strategy that if you can just try to learn and understand, then you can take trades by yourself. Right? You can take trades by yourself. So sometimes you see US 100, look, oh, it's going up, it's going up. It's only going up to continue the sell it has been doing. So notice this break here, this buy, if you mark it and extend it, it got there, sold again until it takes out this level. Now notice this level, if you put it up here again, keep selling. Just follow this particular principle. That's why I said, let me take my time, not just following what you are dropping for me to analyze. If you follow this analysis, then you should be able to tell if price has a chance, that trade you are, that negative, if price will keep pulling, increasing negative, or it has a chance of reversing, right? So, US 2000, US 2000, this is M5, okay, H1. All right, so you can see what US 2002 is doing. Oh, excellent. So in my opinion, too, it's headed for this level, which has gotten, if at all, it doesn't even. Oh, there are two. So it's a zone. It's a wide zone. So potentially it can even clear this level and keep pushing back to the downside. All right. So see this aggressive steep sell here, which shows a sincere and extreme seller's momentum. Right. So is there a possibility of a trend line? Is there? No. There will be, but it will be too far right now. So our job basically is to say, okay, if at all we want to keep selling, where can we sell from? Oh, this origin has not been retested. This one has not been retested. Okay, this one here is what price just retested. So, okay, looking for the buy up before the sell down. Now, if you don't find the buy up before the sell down, that means it's risky to trade that. So I have this bit of a buy up for this sell down. And price has mitigated it already. Price has even sold from it again. One, twice. Okay, so potentially if you can get here, I want to keep selling. And we are selling, targeting this low here. So it's not wide. Now, price is determining how much profit we can make from this chart. Sometimes it might be lower. Sometimes it might even be extended. Okay, so this one, don't push your luck too far. The moment price gets here, take your profit and get out for yourself. All right. Meanwhile, if you're selling here, don't forget to apply your stop loss because you never can tell. So, right. So let me just take one or two that was dropped here for me. Euro USD. Can we buy now US 100? Remember, our overall direction is sell. We are not buying. We are only waiting for it to buy into where we want to sell and sell. Right? We are not forcing the buy. Should us today from what time frame best suited to start the strategy. Now, any time frame, if you are a swing trader, you can afford to wait for a long time. Use your 4-hour time frame and your 1 hour. If you are a day trader, you now use your 15 minutes, to trade it. Then if you can look out for these levels on your lower time frames. But if you're a scalper, you can look out for your entries. You can look out for your entry on even your 15 or 5 minutes, sometimes 1 minute, but 1 minute is too crazy, it's too fast. You can look out for it on 5 minutes, for scalpers. Very, very crazy. Sometimes I love to do the 5 minutes because if you go all the way down, it looks even crazily clear. It looks clear, like really clear. On the condition that it's clear. There are times where you want to do some dangerous things and go to your lower time frame. Hence, you enter the trade, you find out in 5 minutes, 10 minutes, 15 minutes. I think the longest I've stayed is like 40 minutes there, about less than an hour, from 40 minutes. So before price actually really, really gave me some massive profit, struggling to hit TP, then I took it off. Before, enter the trade, if it's going, it's going. If it is indices, if it will go, it will go. If it's not going, you will know. It will go against you quickly, you're out, right? So yes, those are the time frames that you can use to take those trades. Okay, USD, CHF, Euro USD, and USD CHF. So let's just do that one, then call it a day. So this is Euro USD. Now, Euro has been having some massive boosts from the economy, some massive boosts from the economy. Hence, you see that price is looking out for that buy. Now, the reason why we are experiencing a bit of, price is stopping a bit is because, remember, you see this level is where a serious sell started from, right? So massive sell started from that area. If you zoom, not zoom, if you mark the possibility of that buy up before the sell, you notice this level right here, it slowed down. So all things being equal, price was supposed to respect here. It just did a little bit of respect. So possibly if it respects it, then we might have Euro USD pulling down. But I don't think it will pull down for too long. It might just do a little bit of respect, then keep pushing back to the upside. Now this is on the 4-hour time frame. So how does it look like on my lower time frames? Irrespective, if you notice that price gets to your resistance and it's not coming down, it keeps pushing, it keeps pushing, it keeps pushing. So I want it to follow my trend line to break that particular level so that I can now continue buying. Most likely price might break this particular level and keep buying. So if you are going to be buying, allow price to break this particular level first. For those, if you want to apply it on your chart, just mark this as your high, this level as your high. Then on your 1 hour, look out for connecting your trend line from these 3 points here. So if price comes down, hit this trend line, push up until it forces its way out of that point and keep going high. I don't think the only thing that can bring this guy down now is possibly the CPI. The CPI. If the CPI comes out bad for the USD, then Euro USD should keep pushing to the upside. I guess you're on a sell. If you're on a sell, it's dangerous. Then USD CHF, also the USD CHF. Okay. So my 4-hour time frame, we've been selling. The key area is still slightly down here. Okay, maybe it's respecting it from here already. Now, if we are to see any further sell, I'm doing everything here on my 1-hour time frame. So we would, if I break it down, let me take this out. So if I break it down, this is the main origin where sell started from, had a break here. Okay, then started from here again, but had a break here. So price is just respecting this lower part of it. Oh, wow, it's already 9 a.m. Sorry, I have to go. I'm sorry I can't finish this. I have another meeting by 9, and it's already 1 minute past 9. So thank you very much for your time. We'll continue this another time. Please don't forget to join the market review. Don't forget to head over to YouTube, watch these videos again, and learn and understand the strategy for yourself. All right. Thank you so much. God bless you. All right.